HIMSS reported their latest quarterly figures Monday after the market closes, and to be honest, a great quarter, beats across the board, but the stock at the time of making this video is down 23%. Now, first glance, you can see why the stock might be down despite a good quarter, right? Year to date, going into this earnings report, stock was still up 112%. And well, a week or so ago, the stock was up over 180% year to date. You might say this is a mix of momentum, Super Bowl commercial, lots of conversations about HIMSS, especially after that commercial. Also, short squeeze, short interest was quite high, still is quite high. So you put all of that together and you get, well, a stock that was up 180% year to date. And despite it being a good quarter, I am not surprised seeing the stock down 20%, right? I'm not surprised. We're basically now going back to more normal levels when you look at valuation. Plus, when we will look at guidance, there is a big chunk of that guidance that, well, might not be achievable at all. So let's discuss all of that in this video. If you enjoy this type of videos, hit all the buttons. We really appreciate that. Don't forget, we're going live with Jose at, well, lunchtime hour, 12:30 p.m. Eastern. We're going to talk about NVIDIA. We're going to talk about SMCI as well. So stay tuned for that. And if you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's start off with the main numbers here, subscribers and revenue growth. Like I said, beats across the board. Subscriber grew 45% year over year. Revenue grew 95% year over year. If we look at, well, if you zoom out a little bit, we can see that actually subscriber growth, number of subscribers, that has actually accelerated a little bit in the last couple of quarters. Then if we look at monthly online revenue per average subscribers and monthly online revenue per average subscriber, that has also accelerated and has gone up in the last couple of quarters. Of course, the same quarter last year was a quarter where we've seen negative growth. So yeah, this looks extremely good. But don't forget that the same quarter last year was an extremely bad quarter. Moving on to net orders, that continues to go up quite nicely. And average order value, or AOV, also went up extremely quickly in the last couple of quarters. So everything indicates here that HIMSS definitely has momentum with it. I know a lot of the conversation around HIMSS and hers is about GLP-1s, right? Shortage, no shortage, compound, you cannot do this, you cannot do that, which, by the way, it makes sense, right? It's not normal, in my opinion, that the other companies are spending hundreds of millions, if not billions of dollars in R&D, and then you just swoop in and you basically benefit from all of their work and research, which some might say is a bit like parasites, right? I think you can make that case. On the other hand, HIMSS says that, look, we are making this extremely personalized, so yeah, this is the main differentiator. I'm not the judge here, I don't have anything to say, but I can definitely understand both sides, and especially the sides of the likes of Eli Lilly, Novo Nordisk, who have spent a tremendous amount of money in research and development, and they don't want all of their work, well, to basically be stolen, let's call it. But as you know, HIMSS and her is not only GLP-1 or weight loss drugs, although that does make up now 15% of revenue, right? A year ago, everybody was saying, yeah, but who cares about GLP-1s? It's only 4 to 6% of revenue. Yeah, but look, 12 months later, and growing quickly as of now, we're already at 15%. So it definitely is a big deal. But as you can see, they are in other categories. They're expected to launch in more categories in the future. It's really going to be a platform. So I know a lot of focus is on GLP-1s. There's a lot of money to be made in that industry, that's for sure. But HIMSS is not only playing in that weight loss category, it's playing in the mental health, it's playing the sexual health and dermatology as well. Now, looking at HIMSS, the business, the brand, how well they've performed in the last year, or actually in the last couple of years compared to the others. Definitely taking market share. When you look at total customers, if you look at total sales, the same can be said here. Although, yeah, they're not really showing here one medical, the thing from Amazon there. And Amazon, in my opinion, still remains a threat, right? Amazon Prime, I mean, it's quite easy for them to start growing their market share if they really wanted to focus on that. So it's always something to consider. But then again, these are markets that are extremely big. So I would not be surprised if we see multiple winners. But for those that completely disregard Amazon, I think you're lying to yourself. I mean, we're talking here about Amazon. To be honest, if they wanted, they can do in each and every industry and probably come out as winners in the long run. I don't think you understand how strong this company is, especially how strong Amazon Prime is as a subscription service. Although with One Medical, of course, you have to pay, I think if you are a Prime member, you have to pay another $9 or $10 per month or something like that. So, okay, but still, you have to consider that. Continuing here on the GLP-1 thing. So first of all, in most of these studies, it's very important to see what happens after a certain time, how much weight you have lost, and if you are still taking the pills or the injections or whatnot. Here, what they're showing us is reported retention after 12 weeks, which by the way is not that long. You see hims and hers still 70%. And then looking at another study, it's only 42%. If we look at what has happened after 12 weeks, the average weight change is 14 pounds. I don't know how much that is in kilograms, but you lose around 7% of your weight. We have to see what happens in a longer period of time. Like when we're looking at Novo Nordisk, Eli Lilly, even Vikings, the period is much longer than just 12 weeks. Hopefully they'll give us more information about that in the coming quarters, but this is definitely, those are positive signs. And this is, of course, an advantage when you have a platform, a personalized platform, right? You open the app and it will probably remind you, right? Oh, this is your progress. Don't forget to continue to take it if you want to see even further progress. Of course, this is an advantage. And they did talk a little bit about how they could expand, right? White labels have some partnerships from the outside that use their platform, which is a bit more advanced than the legacy system. So these are definitely opportunities for the future. Then when we look at guidance, and again, you're going to laugh because when you look at the expected growth rates, right? For Q1, still expected to grow, 90% at the midpoint. And for the full year 2025, still expected to grow 59-60%, right? So you might say, okay, that's still tremendous growth. Doesn't make sense that the stock is down. 1 second, I'll touch back on that. Adjusted EBITDA for Q1, adjusted EBITDA margin of 11 to 12%. For the full year, between 12 to 13%. When we look at the long-term profitability goals, which should be by 2030, they expect long-term adjusted EBITDA margin between 20 to 30%, so quite a lot higher than the 12% that we're at or expected to be at right now, and gross margin in the mid-70s. Now, if we go and look at what's baked into their guidance for the full year 2025, that's when things get a little tricky. So they said here, our expectations is that weight loss offerings such as our oral solution, liraglutide, which they'll release later this year, and personalized semaglutide will contribute at least $725 million of revenue in 2025. Now, this is a very, very big goal because remember, not so long ago, we've had this come out from the FDA. Semaglutide shortage ends as FDA sets deadline for compounders, which means a big chunk of that expected revenue could disappear. Now, they said the following here. First, given what we know today, we anticipate 2025 revenue contribution from our weight loss specialty of at least $725 million. This figure excludes contributions from commercially available dosages of semaglutide, which will not be offered on the platform after the first quarter. So now we're like, okay, makes sense. Okay, 725, this excludes that number. Okay, fine. Let's continue. There may be the potential to offer commercially available dosages of compounded semaglutide throughout the year. However, we see a steady state weight loss offering being primarily composed of our evolving oral-based solutions as well as liraglutide later this year. Personalized semaglutide dosages will supplement these core offerings. Now, this is the tricky part because this is basically the difference, right? They think that, well, their solutions are highly personalized, which would allow them to continue to sell those. But if the FDA says, actually, no, you're not allowed, then, well, you're putting quite a lot of pressure on your expected growth for the oral-based solutions and the liraglutide later this year, which is probably why the market is highly skeptical of that guidance. Now, if you remove that figure from the full year guidance, they would still be expected to grow 39% or so. So there is that. Again, it's really a story of two sides here. One is saying, oh, it's expected to grow extremely quickly, but then again, that $725 million number might not be a real one. But on the flip side, even if you exclude that number, they're still expected to grow quite rapidly. But then maybe it does not deserve such a high premium, right? Because the stock, like I said, was already up over 100% before they reported earnings. So when you put all of that together, again, I'm not surprised to see the stock down 20%, and maybe throughout the day, the stock will be down a bit more, a bit less, depending also on the market sentiment, because in the last couple of days, the market was a bit all over the place. And so right now, looking at the stock, I had to wait a little bit to see what happens at the open. So the market is open. The stock right now is down around 18% or so. We're at $40, which is just above that 50-day moving average. The 200-day moving average sits at $25.73. So of course, there is a small downtrend right now, right? Two big red candles, but then again, if you zoom out, you see exactly why this is happening. Plus, we were quite higher than the 200-day moving average, so it makes sense that the stock on a technical basis does come down a little bit. The business is clearly doing quite well. If you include or even if you exclude that $725 million, you have to take everything into consideration here, regulations, competition, you name it. So bulls, of course, those that bought at $10, $20, whatnot, are still quite happy. We'll see what happens. But all in all, that's what has happened. That's why the stock is down. Let me know if you intend to buy the dip or not down in the comment section below. And I'll see you all in the next one. Bye-bye.